All right, welcome back to Market Day Report. I'm Scott Shelley, otherwise known as the Cow Guy. Thank you very much for joining us today, and I'm trying to make you stick with us all day because we've got lots to talk about going into a weekend too. So market's going to get a little squirrely here as we watch more and more of the volume slip away from the NCAA tournament and the like. So let's take a look and see what's happening. Corn's had a rough day today. It's off 13 cents, so that hasn't changed much since the last time we were there. 741.5 is where we're at. Well, the good news is we have been lower, so 5 cents lower, so we bounced off of that. But we've got new crop only off 3/4 of a cent. So if you're looking at the new crop, it hasn't been that bad of a day for you. 644.25 is where we're trading right now in that new crop corn D's. How about soybeans? The front month, they too, well, they're off 3 3/4 cents. 16.64 is last. You go out to Nova, it's down 1 3/4 cents. That's the new crop, 14.67.5. So it really hasn't lost too much out there. They're just kind of battening down the hatches, getting ready for a weekend full of news. So is the wheat market, 33 cents lower in that Chicago wheat. That's May, 10.65 even. July is off 30 3/4 to 10.45 So this is what we're going to see throughout these wheat products. Hard red wheat, Kansas City, that's off 22 3/4 cents to 10.69.5. July is off 20 1/4 cents to 10.63. And then we move over to Minneapolis. That wheat market's off not quite as much, 26 cents lower in that May. 10.53 is last. That's about 2.5 cents off the lows. 17 1/4 cents lower in July, 10.49 3/4. Cotton, that one's been on fire as of late. It still is. Whoa, almost up 490 points. 126.76 is last, 10 cents off the highs. So that's a good board to leave on for a second. But let's go to our next guest analyst, Todd Horwitz. He's with Bubba Trading. He's in Las Vegas. Todd, well, no, you're in Chicago. Sorry. What sticks out? I mean, that's a stupid question, actually. I mean, there's a lot that sticks out, but we've been pretty busy. It's been a pretty volatile week. Just look at this wheat market. What really are you concerned about, I guess, going forward?
Well, I think I'm concerned about the same things we've been concerned about: inflation, the problems in Ukraine, the problems we're going to have with wheat and fertilizer. But I think that, from a corn and soy, I think from a grain standpoint, we're going higher. I think there's a lot of room to go up. I think the action in corn and beans has been actually pretty bullish. Lower prices or not, we've held support levels. But, magically, the equities are back on fire again, like there's no more problems. They solved the problems with their potential 7 rate hikes. And, I think that, we're overlooking the real issues of what's happening here and the problems of not being able to produce our own oil. Because, again, oil is on the move back up again as well, which is going to be that's the biggest single problem in my eyes, is the overrunning of oil, because, of course, that goes to about 80% of the things we do. And that, I think, will cause a much bigger problem down the road. And it would be nice if this administration would just pick up on that and go back to fracking and shale producing.
Yeah, be careful there. Almost a bad word almost slipped out. I think you're right. And this is what look, most of the recessions that we've had have been preceded by a spike in oil prices. Well, I got the oil chart right next to your head right now. We've had a spike in oil prices, and they're also preceded by, since 1980, they're preceded by flattening of the yield curve, and that's absolutely happening as well. So 2 big tells about maybe an incoming recession: spike in oil, yield curve flattening. And now I've talked about yield curve flattening on my show. I don't want everybody to get in the weeds about it, but just trust me when I say when short-term yields approach the same level as long-term yields, that's not good. And that's what we're seeing here. So 2 things are telling us loud and clear: look out below. So we're going to have to, take a break here, but that's something I want everybody to leave with, think about for a few seconds. We'll come back and talk livestock with Todd Horwitz. He's in Chicago after this message. All right, welcome back. There you are. Good to have you on board. This is Market Day Report. I'm Scott Shelley, otherwise known as the Cow Guy. Cheap segue into looking at the live cattle markets. How about that? No other better way to get there than saying that one. Live cattle, look at this. We've been doing a little bit better here. It was quiet, but now we're quietly higher. April's up $1.25 to 140.72. That's about 8 cents off the highs, folks. June's up $1.32 to 137.250, and then that's again about 15 cents off the highs. Not bad. Let's move over to feeders. What do we got going on in feeders? Same thing, kind of. April's up $1.95. That's good. Almost $2 higher. 163.05. 7 cents off the highs. Both of these cattle boards are good. May's up $2.15 to 168.02. How about lean hogs? Can we keep the good feeling going? Not really. April's down 15 cents, quietly down to par 20, 100 spot 20. And we've got May down 47 cents to 107 spot 52. Let's bring back in from Bubba Trading, Todd Horwitz. He's in Chicago. Todd, what do you think about the livestock? Where do you stand with this stuff?
I think we're in the same spot, Scott. I think right now we're just rotating between cattle and hogs, and when the markets look good, we start buying cattle again because we get more comfortable, and then when the market starts selling off, we go back to buying hogs, and I think it's going to be like this. I'm not thrilled with cattle right here. I think that it's going to be hurt between all the things we've talked about, inflation. And I think that people are going to have trouble filling up their tank, and they're going to make the decision of where they're going to go. So I'm not thrilled. I think we're at moderate prices, and we could go higher. But certainly I think there's less resistance going to the downside from here, especially if we continue to see this inflation pick up. And there's really no signs that it's going to stop. And then you got the issue with fertilizers and other things that are just going to create a real mess before it's all said and done.
Well, everything that's happening right now is taking money out of your pocket, whether it be, inflation at the dinner table, inflation at the restaurant, inflation at the gas tank, gas pump. I mean, those things have all started to hurt, and that's going to be, that's real. And then another thing is we've seen some polls come out. I don't know if you've seen these, Todd, or not, but Rasmussen came out and said, 62% of Americans are now starting to change the way their behaviors about what they're buying, and which I can totally believe. And
I think it's.
Go ahead.
I think they need to. I think this is, listen, I would just say one thing in closing. I know we're almost at the end. Nominal interest rates are still negative. The Fed would have to raise to about 6% to get back to zero in reality. And that's the real problem when the Federal Reserve continues to take money out of our pocket secretly to let the government spend it on nonsense instead of actually doing their job, which is to keep the economy rolling and raising rates all along, because true price discovery will tell you that rates should be higher.
Yeah, the horse has left the barn, that's for sure. That's an RFD TV term of the day. Horse has left the barn. All right. Thank you very much, Todd Horwitz from Bubba Trading in Chicago. Thanks for being on the show. I'm going to bring this back to Nashville so I can throw it back over to Janet.